Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Checking in on the tech sector, XLK, Apple, and Facebook, and the tech sector is still strong, although we did see a little bit of weakness at the end of the week, which will have us cautious for some healthy consolidation after a 4-day big bull move. Certainly no surprise to see consolidation. We have a double top by a penny, 53.48 and 53.49. This is the second time this week where we have seen a double top on SPY and a double top on XLK. That was at 53.34. And now a double top on SPY again and a double top on XLK. And you can't really have any more clear evidence of the strong correlation in SPY and the tech sector, which is one of its largest holdings. So we have that double top of clear resistance to be watching next week. And what the bears are going to be looking for is for a break of the higher low pattern. So I'm looking at 53.25, 53.23 the past 2 days. Break those levels and we will look to see some weakness. This is a bearish reversal candlestick after a 4-day bull move, so break that 53.25 level on Monday and we will look to consolidate and test the middle Bollinger Band, which will be just above $53 to start next week. So the upper Bollinger Band is keeping a cap on things. It rejected the highs back on at the end of March, the third week of March, and now here it is rejecting again. We haven't even really touched it as significantly as we did back then, but we are looking to consolidate. And the question will be, do we consolidate and then continue to the upside, or do we see some more increased bearish volume that indicates maybe it's more than that? So the weekly time frame right now, extremely strong, exponential support. This 4 period has been holding like a champion, and there is no sign of the bears anywhere to be found. And we will be looking for a loss of these exponential moving averages to indicate some short-term weakness, but again, no sign of that in the short term. Apple is consolidating in a potential bull flag pattern after a 3-day green move to the upside. Normal healthy consolidation, very low bear volume, bulls buying the dip, nice contained range. It would require a break of the low of Friday, 143.01, and some increased bear volume to not be a bull flag. And if it is a bull flag, the bulls should head back up towards the 144.50, little double top at that all-time high. So Monday's action is going to be very telling as to whether or not this is a bull flag, which indicates continuation, or if it is not a bull flag and we lose these daily exponential moving average supports. Weekly time frame for Apple, you cannot have a better chart. Negating bearish reversal candlesticks, left and right, bullish engulfing candlestick after a weak candlestick last week, and we are holding this 4-period exponential moving average support ever since the start of December. The bulls are just extremely strong here, and again, you cannot have a stronger chart than what we are seeing on Apple over the past 4 months. No sign of the bears, bulls in full control. Facebook, similar, very similar. Big 3-day bull move, potential bull flag of consolidation, pretty much the exact same thing that I just said. Facebook and Apple are very strongly correlated this past week, and it's going to be up to support 141.85 and 141.89. If we lose those levels, we will be looking at a less likely chance of it being a bull flag, but it all depends on whether or not we lose these exponential moving averages. If we continue to hold them, the odds of it being a bull flag for continuation and new all-time highs remains very strong. So we'll be watching this middle Bollinger Band for both Apple and Facebook. They held consolidation in the past, and as long as that middle Bollinger Band holds, the bulls are in full control on the daily. Same thing with the weekly time frame, negating the bearish reversal spinning top candlestick of last week, holding the 4-period exponential moving average support all of 2017, and absolutely no sign of the bears after a recovery week here on the weekly time frame. So everything is very similar here. XLK and SPY are similar in terms of their price action this week. Apple and Facebook are extremely similar. So correlations are abound. They are absolutely worth watching, and very curious to see what kind of consolidation we get to start next week and as to whether or not these are bull flags. They are very tight ranges, so I do not suggest day trading Apple and Facebook with these tiny ranges the past few days. that's for swing trades at this point, or waiting patiently for a spike in volume and a spike in volatility to indicate it's back to being nice day trading environments. So thanks for tuning in. Have a great rest of your weekend, and we'll check back in after Monday's trading.